Welcome to the Market Action Podcast for Wednesday, April 17th. Today's story is a big rotation in stocks as views of the economy improve. That's making investors love financials and industrials as they liquidate other sectors, especially healthcare. Hello, this is David Russell from TradeStation. The overall market has barely moved in the last week, but there's been all kinds of changes beneath the surface. Simply put, money is shifting into financial and industrial stocks and away from safe havens like utilities and especially healthcare. The pain in healthcare is really something. On Tuesday, it had its biggest decline relative to the S&P 500 in over 2 years, despite good earnings at some major companies. There seems to be spreading worries about prices dropping, or at least going up more slowly. Not just for drugs, but also for services like kidney dialysis. That's already dragged down some major companies like CVS. On top of that, you have the risk of the pressure only getting worse as a crowded field of Democrats vie for the nomination for president. Meanwhile, President Trump also has been squeezing the industry for lower prices. But then the financial stocks are trading just the opposite. Almost every company in the sector is up in the last week. Banks like JP Morgan Chase and PNC, life insurers like Prudential, mutual fund operators like BlackRock, financial exchanges like CBOE and ICE, insurance companies like Progressive. Several have reported strong earnings. Others are simply rising as investors look for higher interest rates to help their earnings down the road. And why are people looking for higher rates? Well, the economic data has improved sharply of late. Today, for example, the U.S. trade deficit for February came in much narrower than feared. And last week, jobless claims fell below 200,000 for the first time in almost 50 years. We've also seen a sharp spike in mortgage applications for people looking to buy houses, and not just to refinance. You know, housing has been a missing piece in the economic puzzle for a long time, but now will it finally kick into gear? Also, China's last economic growth numbers beat forecasts, relieving some fears of crisis in the giant Asian economy. Suddenly you have to wonder if the Federal Reserve was not overreacting by going so dovish about interest rates earlier in the year. Remember, all those economic numbers we've been looking at recently will really keep attention on first quarter GDP due next Friday, April 26th. So the key takeaway is that optimism is spreading in the market as recession worries fade. That's pushing investors into new kinds of stocks, especially companies in the financial sector. Thanks for listening to the Market Action Podcast. This has been David Russell for TradeStation.
The preceding podcast was for educational purposes only. All of the symbols and trading ideas discussed were for demonstration purposes and not recommendation. Active trading is not suitable for everyone. You can find additional disclosure information on the TradeStation.com website. Thank you for listening.